You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Where does it come from? Do you just print it?
We print it digitally.
I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's
Really?
gone up.
Hey, Internet. Welcome to another episode of the Acropolis New Foundations podcast. I'm your host, Chase Palmieri, CEO at Acropolis. Acropolis is the Bitcoin Treasury platform for businesses built on multi-institution custody. And in studio today, we have with us Mason Foard, the Director of Bitcoin Strategy at Méliuz and a very popular member of MSTR True North, and Diego Kolling, the Head of Bitcoin Strategy at Méliuz, a Brazilian Bitcoin Treasury company that also has an underlying operating business. And so we're going to get into that. And I'm actually coming to you live from Brazil for my first podcast from Brazil. So it's great to have the Brazilian company Méliuz on in studio with us today. How's it going, guys?
Great, Chase. Thanks for having us on.
Great.
Thank you, Chase, for the invite.
Of course, of course. And so I want to start with just a little bit of macro news, or macro as it relates to Bitcoin Treasury companies, which really revolves around strategy as the macro gorilla in the room. They received their first ever credit rating from a major rating agency this week. In our world, we know that that's actually a really big deal, a massive domino that has now fallen. But I think onlookers maybe aren't fully appreciating the significance of that development. So would one of you like to maybe share why this is meaningful?
Yeah, I'll hop in. So Strategy got a credit rating of B- assigned to them by S&P. And this is important, although it's low, and I'll go into that, simply because a lot of institutional funds, a lot of big capital allocators need a credit rating in order to invest in their debt or their securities. I think it's also important because it's just a general recognition of their strategy broadly. I will say the B- rating is too low. If you believe that Bitcoin is pristine collateral, fundamentally they are way over collateralized on their perpetual preferred. So B- is probably too low.
I think there is a point to be made, Mason. I don't know if you agree with me that I come from the business world where it's usually a good thing to underpromise and overdeliver. So if we could get a starting point for the credit ratings at Strategy, I would ask it for be lower than what it's actually at, so we can grow up from here and cause like a good feeling of a safety net or a conservative position from the credit rating agencies. It can be interpreted maybe as a gift to investors, because the perfect scenario would be for us to have a credit as safe as a AAA, but having the credit ratings saying it's a B-. So from this perspective, it can be, as some Bitcoiners are saying, up only, it's a gifted position for us Bitcoiners that can assess real risks, credit risks from Strategy, and position ourselves in a much safer scenario now than it was before the credit rating, the agencies saying what they actually think.
Yeah, and I also want to point out that the rating matches the credit spreads. So if you look at where Strategies prefers the yield that they are offering compared to the 10-year, right, it would be in the range of a junk bond or a highly speculative debt instrument, which would have a rating of B-. So part of me thinks that the S&P kind of looked at the credit spreads and said, hey, this is what the market is assigning the risk. Why not just take that at face value and not really look into it any deeper. And I think that's what Diego is pointing out, which is if you have a fundamental belief in Bitcoin, if you understand the institutional adoption that's going on, if you understand the long-term trajectory, there's massive opportunity, because I believe fundamentally those products are far safer than a B- rating.
Yeah, I think that's a great point about matching the yield to the credit rating. I'm sure that came into play. There's probably also something to be said about just the dividends from the preferreds just not having a very long track record to date. Perhaps that also came into play. But it would have been a lot to ask for to see these credit ratings just instantly deem Strategy the winner with a AAA rating and the highest yield in the market. That would have been almost like leaning their weight onto Strategy to its benefit against all other players in the market. So we'll see. It's the starting gun for a race in digital credit that I know you all are following very closely. So at Meliuz really stands out in the Bitcoin Treasury landscape because it does have a profitable operating business, which is unlike most of the newer entrants in the space that are relying purely on the capital markets arbitrage. And so I'm curious, if this one's obviously for both of you, what advantages or opportunities does having a profitable underlying operating business give to a Bitcoin treasury company that these pure plays, or even companies that have engaged in Bitcoin almost as a last resort because they have negative free cash flows, what does that afford you all the opportunity to do either in the short or long term that these others just can't even begin to look at in their toolkit?
Yeah, let's start off with number one. What is our operating business, right? And I think that's an important factor here, because our operating business provides unique opportunities down the line. So what Meliuz is an e-commerce platform in Brazil with around 43 million users, and we are the third fastest shopping app in Brazil, and we facilitate around 3% of all e-commerce in Brazil, right? So we have a massive platform in Brazil where fundamentally what we are doing is we are connecting shoppers with brands and offering the shoppers cash back. Also within our app, we provide financial services, but right now that is our main revenue source. And that's a key word, revenue, right? You ask, what does having a profitable operating business afford us? Well, it affords us the ability to buy Bitcoin regardless of MNAV or market sentiment or what Bitcoin's doing. And an example of how we are deploying that right now, structurally in the Bitcoin treasury landscape, we've seen MNAVs compress since the spring of 2025. Many of them have gone below 1 MNAV, including us. I think last month we went below our Bitcoin holdings, right? So we have a profitable operating business, and then our Bitcoin holdings. So our profitable operating business was effectively valued at nothing. Negative. And then we were trading at less than our Bitcoin holdings. So we announced that we are buying back 10% of our free float. And we are doing that with, we have a little bit of cash on hand, and then we also make a profit. And when you buy back your free float, you are doing the same thing essentially as buying more Bitcoin, in that you are increasing Bitcoin per share. And that's our number one KPI. That's our mandate to our investors, is to increase the Bitcoin per share. So that's one example of the operating business. Another way that's unique to us, a unique opportunity, is because we have a massive platform and a operating business that interacts with e-commerce, with money, with financial services, is implementing Bitcoin into that ecosystem. And that's something that we are really excited about, something that Diego and I are working with our head of product, Andre, on, trying to progress not only Bitcoin integration into the traditional finance realm, but also Bitcoin native services that are cross-compatible with what we already offer.
Yeah, those are all good points. I would just add that we are growing fast as well. We are growing our bottom line at close to 20% a year, and we are on all-time high of EBITDA, all-time high of revenue. So we just had our best ever first quarter, our best ever second quarter. The third quarter, we are about to announce the results. We can't talk about it, but we've been having a great year, and we already have bought $1 million of Bitcoin right out of our cash generating business, which made of us buy 9 Bitcoins. And it was just since June. So in June, we issued some stocks to buy Bitcoin. And since then, we generated a free cash flow of $1 million to buy more Bitcoin. So it's safe to say that we are going to keep doing that as well.
Just to illustrate where we are currently, we currently have 605 Bitcoin, right? And our EBITDA is around 14.3 million, net revenue around 9 million, right? So if we took all of that profit and swept it into Bitcoin with our 605 Bitcoin, and let's say we had an average price, let's be conservative, of 150K per Bitcoin, that would get us around a 10% Bitcoin yield just from our cash flow alone. Of course, we're doing things such as share buybacks, to increase Bitcoin per share. So it's not going to necessarily be to look like that, but just to illustrate where we are, we're still relative to our cash flow, our Bitcoin holdings. We are able to make a substantial gain, a substantial Bitcoin yield just from our cash flow.
Still on our operating business, there is a cool story, Chase. First of all, I think it's poetic for Méliuz to be the first Bitcoin treasury company of Brazil and Latin America to have a ticker as Cash3. Okay, everyone likes that. But what is behind this story is that some used to say, Mason, you might hear this a lot as well, that we weren't born to give our users, the 43 million users Mason was talking about, something better. Actually, Meliuz is Latin word for better, in Portuguese, melhor, which is something better than points, better than altcoins, something better as cashback, which is our what we call money in Brazil. It's the real. In the United States, it's the dollar. So by now, adopting a Bitcoin standard, some used to say it's Méliuz 2.0, because we are keeping reaching for something better, something Méliuz, to give our customers. And as we've learned about Bitcoin, we put it on our treasury, and we are surely going to use it as the cashback option for users to buy those $1 billion a year they buy throughout us, and then receive Bitcoin as cashback, as an evolution, as a Méliuz option, as a better option to the real or the dollar. So it is all a big arc since 2011, when we were founded, to give users better options for their money.
I'm really excited to hear that. That was actually going to be my next question, is about whether or not you would consider doing Bitcoin as opposed to cashback, because I recently switched to the Gemini credit card, and then like 2 weeks later, you see Coinbase launching their Bitcoin-backed rewards credit card. And so this space is heating up, and there's definitely a ton of opportunity as this being kind of a passive way for people in Brazil to kind of DCA into Bitcoin with the rewards and all of the infrastructure that you all already have in place. So I'm very, very happy to see that that's going to be coming out at some point. When you look at Bitcoin, obviously it represents this reserve asset on the Treasury. Now you all are looking at ways to integrate it into the financial ecosystem that you all have built. And perhaps one of the most important considerations is how to actually custody the Bitcoin Treasury. Now, all of the work that Mason does with his big brain there to come up with more ways to increase Bitcoin per share is really only as valuable as Meliuz's ability to hold the Bitcoin over the long term. And that's how we all came into contact. Meliuz has recently decided to use Acropolis's multi-institution custody solution, which is a very unique model in the market to hold the Bitcoin. I'm curious what went into that decision for you all, what you like about a model like multi-institution custody. Just would love to hear it.
To be honest, Chase, we have studied multiple custodian solutions since March when we first bought our Bitcoins. We bought in March 10% of our Treasury, which is the equivalent of 44 Bitcoins or something like that. And we had to research the custodian market, and we were really happy overall on where the market is as of now. We saw a lot of super mature and secure custodians that have grown to learn a lot of what happened throughout the years. They all have been hacked somehow. They all have had to deal with bad actors and problems with their clients. So they just build up a lot of safety nets to avoid every problem possible. The thing is, we realize that the gold standard for the industry, for other Bitcoin treasury companies, for ETFs, for institutionals overall, was to distribute our study between multiple custodians. And we were not totally satisfied with that because as Bitcoiners ourselves, we do not recommend that for any high net worth family to have multiple wallets because Bitcoin actually has a better solution for avoiding single points of failure. And its name is multi-sig wallets. So instead of having multiple wallets, it's much better for you to have one single wallet with multiple keys distributed throughout multiple vendors, multiple suppliers in different jurisdictions. And you keep the same level of safety, even better, I think, but in a much more coherent UX and with much more ways to deal with catastrophe. We were looking for multi-signature wallets for institutionals that were also multi-vendors, which is the gold standard for families, high net worth families. Build a multi-sig solution with multi-vendors, multiple providers. And that's where OnRamp and Acropolis comes in because you are a company built on top of years of experience holding institutional clients Bitcoin. And then you saw this opportunity of building what is the real gold standard of the Bitcoin custody, which is a multi-sig solution with multiple providers, instead of this fake gold standard, which is distributing Bitcoin throughout multiple providers. And to give our audience an example is that nowadays, if a single custodian is compromised, maybe a relevant part of an ETF or a Bitcoin treasury company portfolio might be gone, although not all, because they distribute between multiple custodians. In case of on-ramp solutions that distribute custody between multiple providers, there is no single provider that can move funds, even if they get compromised. So it's an added layer of security that removes single point of failures that manifests itself usually not in the form of a bad architecture. All those custodians, traditional custodians, they all use multi-sig already, you might think. They all use multi-sig. The problem is some people inside those organizations know them all, know where they are, know how to their way to the movement of funds. So when you have multiple companies, there is no one to know how to make them all together move the funds, which is a much safer assumption to have when custodying your Bitcoin.
Yeah, I think a good analogy for it is if you think back to gold. Right now, a lot of the Bitcoin treasury companies are diversifying in the way that you might diversify a physical treasury reserve asset like gold, where they're sending 20% of their gold to 5 different institutions or bank vaults. But if any one of those bank vaults were compromised, they just are assuming a loss of 20%. Whereas because Bitcoin is this natively decentralized asset, you can actually have it so that none of those bank vaults are actually holding unilateral access if one of them is compromised. They're all just essentially holding a key, and then you can coordinate through a company's legal structure like Meliuz when you want those keys to be signed to move Bitcoin in. And in many cases with these Bitcoin treasury companies, this is a one-directional trade, right? You all are hoping to never have to sell this Bitcoin, or maybe there will be some dynamics where it becomes accretive to Bitcoin per share to do so. But a lot of these companies really are just in the accumulation phase. So it makes sense to take that security as a high priority. And I'm hoping that a company like Méliuz that has taken this really responsible step when it comes to custody starts to be rewarded in the market, and that it becomes kind of a pressure function against other Bitcoin treasury companies to start really considering their custody setup, and that retail investors or institutional investors also start to look deeper at the custody of the underlying Bitcoin when making these investment decisions. So we'll move away from all that self-promotional aspect of what's going on with Méliuz and Acropolis, but it's just an amazing announcement, and we wanted to share that. One thing I wanted to get into next, which is, it's somewhat interesting because when Acropolis first reached out to Méliuz, Méliuz was at the time the biggest Bitcoin treasury company in all of Latin America. It had just passed Mercado Libre, based in Argentina, for that #1 spot. Was absolutely clearly the leader in Brazil, but really had the lead in all of Latin America as far as publicly traded Bitcoin treasury companies go. We have seen a new entrant from the Brazilian market, Orange BTC. They've entered the scene and, for however long or however brief it may be, have taken up the mantle as the biggest Bitcoin treasury in Latin America. I'm curious, with Mason joining the team and, with all of the ways that you're trying to attract investor participation in this story, how has that affected maybe the storytelling, the marketing, the narrative when speaking to institutional investors?
Yeah, I think that's a great question. Orange, yeah, they came on the market as fundamentally a pure play, right? Meaning that they don't have an operational business. And what comes to mind for me is essentially what you're doing with a Bitcoin treasury company is you're attaching some kind of cash flow to Bitcoin, or you're creating some yield to Bitcoin. And the question becomes, what type of investors do you attract, right? Because a lot of the capital that's coming into Bitcoin treasury companies is institutional money, or money that otherwise wouldn't have flown into the digital commodity that is Bitcoin. It's capital that is reserved for equities, debt instruments. Fundamentally, it's traditional capital. So I think what we uniquely offer is a cash flowing business that has Bitcoin exposure. And if you're institutional capital, if you're a capital allocator and you're still skeptical of Bitcoin, or you haven't fully been orange pilled, I think what we provide is an equity vehicle that gives you Bitcoin exposure, but we still have an underlying business, and you're still going to be relatively familiar. So essentially, we are more appetizing to institutional capital at this point. But we want Orange to do great. I mean, we want Bitcoin to be in every single company in Brazil. And the beautiful thing about Bitcoin is it's not zero sum. The more Bitcoin they buy, the better off we do. The more Bitcoin we buy, the better off they do. Vice versa to every single company in Brazil, every single individual, every single institution, not only in Brazil, but globally. It's a beautiful, virtuous system. But we'll see how they do. Brazil definitely has its challenges, and one of those is a very high interest rate environment. Right now, it's at 15%, and issuing debt or borrowing money at 15% in this current environment, especially with Bitcoin's relatively flat performance this year, we're up, but it feels like we haven't done much compared to everything else. It's going to be challenging. So I think we're pretty eager to see how they attempt to generate yield, and it's going to be fascinating to see.
I think that that's really worth calling out, Mason, is this idea that in Brazil, the country was one of the first to actually begin raising interest rates in the aftermath of COVID and has actually left rates relatively high when compared to other countries. And that does, I think, make the pure play Bitcoin Treasury game a little bit harder here. Whereas if you were to compare it to Metaplanet, where you could argue you have negative real interest rates, it's obviously it generates a higher yield, or it's a more straightforward story on how they're going to be able to generate yield through that gap when engaged in the capital markets. But it does seem like in Brazil in particular, using something like free cash flow from a profitable operating business to acquire Bitcoin, especially amid these high interest rates, does seem the more appetizing strategy. Diego, did you have anything to add there?
No, sure. I would just compliment Mason saying that Orange has a really respectable team. We wish them the best, really. And besides this, the obvious contemplation that you may argue that it's easier for us to present good Bitcoin yields by being much smaller than them. I would say that we've been building up our investor base for years now. We were the first startup in Brazil to IPO in 2020, and we've grown our investor base to 60K people, which is actually a respectable number. For comparison, Metaplanet reached the same number of investors, I think, in the beginning of this year. They've started from much behind last year. And as Mason was saying, that we already have Bitcoin buys and sells because of a crypto exchange we bought in 21. We developed financial services since then by having acquired a full service banking along the way. And we have all this know-how of how to do e-commerce, shopping, and financial services, where we now introduce Bitcoin slowly, first by buying and selling, then offering it as a cashback option, and sky's the limit in the end of the day. And whatever the successful ways Orange, BTC, and other pure plays find to add Bitcoin yield, we are going to surely be watching and learning from them. As I think the opposite is also true, because what we are going to do with Bitcoin, leveraging our 43 million users and 50K new users every day throughout our app, is going to be also a good lesson for them on how to build the Bitcoin standard company of the future.
Yeah, we all absolutely want what's best for Bitcoin in Brazil. And so ultimately, it was just a matter of time before we saw more entrants of size and strong executive teams entering the Brazilian market. So it's absolutely a net positive. And if anything, you know, in the same way that Metaplanet or Semler following strategy was almost a validation of strategy, you can say it's the same thing for what you all are doing in the Brazilian market. And being first is still incredibly meaningful. And when we're talking about these high interest rates, I have actually done what no Bitcoiner should do and bought a house in the last few years. And I bought a house in Rio. And so I'm familiar with these very high interest rates. But Diego, I'm curious, when it comes to the financial services aspect that you all can do, we have used the consortio, which is something somewhat specific to Brazil. It's not very common to see elsewhere. And maybe you can explain what a consortio is and whether or not you see there being a path for Bitcoin to have a role to play in fusing into that type of a vehicle.
Well, unfortunately, the best I know of consortiums is a good joke, actually, because they say consortium is just bad if you are poor or have bad luck, which seems to be neither the case with you. But consortium is actually a good financial instrument that Brazilians use, and from my understanding, it's some sort of distributing the weight of having to deal with high yielding environments, because it's some sort of equity crowdfunding buying of things where everyone gets together to buy together a house, as you might have said, and every month someone is lucky enough to be elected to win the house, even having not paid the whole price. So that's where the bad lucky guy does not appreciate this kind of product, because if you're lucky enough, you're going to receive the house right in the beginning, but you can compensate your bad luck by doing some sort of like upping your proposals in the middle of the way to see if you get more lucky and get the house up front. So it's some sort of equity crowdfunding the Brazilian way. But to be honest, Chase, I would comment with you what I have also shared with Mason. The important thing here when it comes to high interest rates in Brazil is that Brazilians have a super strong culture of buying fixed income instruments. And that's why we say that we are the country which is the paradise of rentists and the hell of investors, because famously our Fed funds rate, which is our Selic, has outperformed our stock indexes, which would be our S&P 500. So rentists have outperformed stock investors. And that makes a good point for treasury companies to eventually issue fixed income instruments on the Bitcoin standard and be successful in the country that appreciate that even more than actually our 60-40 portfolio would be 60% fixed income, contrary to the United States where the 60% part is the variable income part. And that I think may be our leverage on this difficult scenario where we can make a lemonade out of these lemons.
Yeah, I think that makes a ton of sense. Another interesting aspect, and because again, I'm on the ground here in Brazil, I've lived here off and on, but another thing that's also really unique to Brazil is this idea that when you're checking out at the counter for any material purchase, you can actually extend your payment without any interest for sometimes 6 installments up to 12 installments. And so there's just a really interesting nuance here in the Brazilian market when it comes to things like consortios or, these breaking up of payments over multiple installments without any interest attached to it. And there's just so much opportunity to infuse Bitcoin into some of these products, I think. So it'll be very interesting to see how Bitcoin meets Brazil, where Brazil is at, and where the kind of culture of consumerism is today here. And so, Mason, you're American coming to work at a Brazilian company. You haven't been at Meliuz for very long, I know, but you're kind of tasked with helping to shape the go-forward strategy. What kind of things are you thinking through on the accumulation size? What kind of things are you prioritizing? I know you're going to have to be careful about not speaking to anything too, forward-looking as a publicly traded company, but what's kind of top of mind if you can maybe tease that out for us?
Yeah. I think the biggest realization that I've had is that you are a product of the investing environment in which you live in, right? So I had a very US centric point of view when it came to market structure, interest rates, fundamentally just understanding the capital environment in which I exist. And when you were dropped into another country, right? Like I was 2 months ago, not physically, but via Zoom meetings and such, you start to realize that you are in a completely new environment with new challenges, with new opportunities, and your thinking has to change. You have to adapt. So I think I had a pretty kind of rigid idea of what a Bitcoin treasury company strategy should be, but that was from a US perspective. And when entered the Brazilian market, it suddenly totally changes. Your strategy has to change, and to some extent your time preference has to change. I think eventually Brazilian rates will come down. I mean, hopefully. And I think if that does occur and Bitcoin continues to be on the trajectory it has been, I think that gives us a fantastic opportunity to offer some kind of debt product. But at this time, I'm very, very thankful that we have a operating business and we're able to offer a substantial Bitcoin yield regardless of interest rates, regardless of anything that's happening in the market. So that's the main insight that I've had is every single company globally, every Bitcoin treasury company globally is going to have different factors, different environmental pressures, and they will then act differently. And there's not one fix all or one strategy that works for everyone.
Yeah, we hear sometimes people poo-poo the jurisdictional arbitrage aspect of Bitcoin treasury companies, but like you said, every single one of these companies is operating in a unique market with unique interest rates, unique ability to access capital, unique demographics, consumerism, investor appetites. So it's and even just tax treatment alone, like something like Metaplanet, can be incredibly opportunistic. So yes, I'm very excited to see what you all do next in the capital markets here with Meliuz. Mason, obviously you've kind of had your rise to prominence in the Bitcoin space through MSTR True North. You obviously earned your spot there through some amazing content on X and elsewhere ahead of time, but that's really where your face kind of became known to the point where you would get hired as a director of Bitcoin strategy. I'm curious if you're thinking through at all the media side of Méliuz. To some degree, the digitization of investor relations, as Saylor has referred to your group there, is most useful, most authentic when you don't have kind of a straight relationship with the company, as you all don't at MSTR True North when covering strategy. Now you're here at Méliuz, but there's obviously value to this digitization of investor relations and just media in general to inform and be transparent with the investor base. So how are you all thinking about the media aspect?
Yeah, I mean, I think that the most successful Bitcoin treasury companies will be the ones who are most involved with outreach and education and with just general media distribution. So to be perfectly honest, that's why we're here today, right? It is to talk to people, share our story. And I think that's something that's really important to us is to be authentic, share what we're doing authentically with full transparency. And share our story because I think it's fascinating. This whole process for me has been wild to come to a completely new market, and I think that's something that we can add to the general Bitcoin treasury discourse. Is this quote unquote foreign perspective, right? In the same way Dylan LeClaire has a different perspective in Japan, we have a different perspective in Brazil. But yeah, absolutely. The digital transformation of investor relations is a part of this broader movement of the digitization of capital, the everything, right? It was an inevitable next step, and I think it's only going to continue to grow and progress from here.
To give you a point of interest, that an anecdote actually to show how we are learning from them. There is a cool story about our last earning calls, the earning calls to the second quarter, which was right afterwards strategy earning calls, where they did a live stream with Masons friends and a strategy team online on YouTube, and we heard from them that they were just doing that because they were actually being forced by True North guys for doing that, because you talk, you do an earnings calls, then these guys enter online and put 3,000 guys online. Okay, let's do it together then, and then we can help some more. And a week after, we did our first YouTube online earning call with some prominent Bitcoin educators here in Brazil. And we are about to do the same on the next earning calls for the third quarter. So it has already changed us in a way, and we keep learning from them and surely following their movements. And we expect one day also to be introducing some new ways to interact with the audience.
Yeah, it's very clear that what used to be a very boring earnings call is now an opportunity to treat it like an event, like a celebration of the community that's backing the company, and obviously a way to be incredibly transparent and accessible for the executive team to their investor base. So I applaud you all on that. Please keep me in mind for that. I would love to participate somehow, even if I'm just get one question in. Thank you so much for the time today, Diego and Mason. For those listening that have made it all the way this far, please do give it a like and a subscribe to the channel. Please share this out, especially if you know folks in Brazil who might be looking at really interesting equities that have Bitcoin exposure. Obviously, Meliuz is also available OTC in the United States, so don't feel like you have to be a Brazilian investor to participate in this story. I have been and will continue to be following this very closely. Was very excited to see Mason joining the team. Thank you again. Please give listeners a place where they can go and follow the two of you.
Yeah, you can follow me at Mason Foard on X, Foard. It's a slightly odd spelling. And also on LinkedIn. Those are the two best ways to reach out to me.
Nice. Thank you, Chase, once more. And for the audience to be here throughout this whole podcast, they can all find Diego Kolling, which is Kolling, on every platform.
Thanks again, guys. Talk soon.
Thanks, Chase.
Thanks for listening to this week's episode of the show. Don't forget to like, follow, subscribe, or leave a rating on your preferred podcast platform. One of the missions of Acropolis is to educate the public on the transformational benefits of Bitcoin and Bitcoin treasuries for companies. The more engagement we get, the more efficiently we can spread this message. Lastly, quick reminder that New Foundations is for informational and entertainment purposes only, and nothing should be construed as investment, financial, or legal advice. Companies interested in Acropolis can go to acropolistreasury.com to get in touch with our team.